Good afternoon. Today is Thursday, and it's time is January the 11th. We are 4 minutes to noon. That's why I'm calling it the afternoon. So anyway, let's do a bit of recap as to what happened overnight on Wall Street. We have seen equity prices attempting to rally again ahead of tonight's Consumer Price Index, or the CPI. Now, tomorrow we also have another inflation data, which is the Producer Price Index, the PPI. So both these two numbers will be important this week, as market participants will be looking for clues as to whether the Federal Reserve will act on cutting interest rate as they have hinted. Now, last Friday, we have the non-farm payroll numbers, and those numbers suggest that the economy is still hot, and this is therefore not the time to cut interest rate, because if you cut interest rate when the economy is doing well, you will fuel inflation all over again. So again, we want to see whether the headline numbers tonight will be suggesting higher inflation ahead. The market is expecting month on month for the inflation to bump up a little bit to 0.3, and then for the headline core CPI numbers on the month-on-month basis to actually go to 3.2%. So again, we are expecting mixed numbers. Month-on-month, we're expecting a marginal rise in inflation, whereas on a year-on-year basis, we continue to expect a continued dip in overall inflation. So we will have to see what happens. And of course, we want to take both the CPI and the PPI into consideration before we formulate an opinion. But right now, the market seems to be wanting to go higher. We can see that the Dow Jones, having traded to the all-time high at the beginning of the year itself at 37,709.08, is likely to be broken in the next few trading sessions. And I think momentum suggests that we probably will see higher prices more than it will come off. But ideally, we would like to see a dip before the market goes up, because the current structure does not suggest that we have seen the ideal correction. So ideally, what we want to see is a dip before the market rises again, possibly next week. Okay, so in the S&P 500, we can see that this is about the only major equity index that has yet to break into all-time high. Now, December, we saw that attempt, which only resulted in a high of 4,793.3, which is marginally below the all-time high of 4,818.62 traded on January the 4th of 2022. So 2022, correct. So we can see that the S&P 500 is also looking to go higher. We have seen the bounce this week has been rather consistent from 4,682.11. The market has been trading higher every single day so far this week, except for Tuesday, where the market actually went flat a little bit. And on the Nasdaq 100, Nasdaq is trying to recover from the deep pullback from 16,969.17. Deep is relative because, of course, we knew that the Nasdaq 100 has gone up 53% last year, and the pullback obviously is a reflection of the overshoot in tech stocks, and a deeper pullback is also quite understandable. But by and large, you can see that tech stocks is again on the run, okay, led by NVIDIA. NVIDIA have a solid year last year, and it looks like it's going to continue forward with its AI chips. And we can see that the overall sentiment in tech stocks does suggest higher prices ahead. And over in Asia, we can see that the Nikkei is enjoying a fantastic run. This morning, we saw the Nikkei trading above the 35,000 for the first time since 1990. So this is some say it's 33-year high, some say it's 34-year high. But this is remarkable because before the last two trading sessions, we can see that the market was also struggling to go above the 33,800. But over the last 2 days, we can see, including today, prices has actually rallied tremendously, and now we are at 35,000. Currently, it's at 35,100. I think the immediate resistance level will be somewhere around very, very close by, between 35,360 to 35,550 levels. So do watch out for near-term top. Over in Hang Seng, we can see that the market is bouncing this morning from a low of 16,079. I have always mentioned that this is a level to watch because there is a level of demand previously from 15,945 to 16,125. So the market rally this morning is no surprise to me. So this is setting the stage for a three-wave rally, perhaps to test the 17,500 over time. Okay, and over in the dollar is pretty muted. We don't see big move, but I do suspect that we probably will see a dip before the market extend higher from the low of 100.32 in the dollar index futures. So target is about 104.40 levels. Okay, this is I think the level to watch out for, because previously this is where the market top up before it went down to 100.32 in the dollar index. Over in the principal currency, we can see the euro dollar may actually bounce. I'm hoping the market can bounce back to 110.15 to 110.40 for me to anchor another short for the market to go down in the three-wave decline, ideally targeting 107. Okay, sterling has its different structure. Sterling seems to be holding very well. We have 4 bottoms here, all aligning at 126.11 to 10 levels. I can see that these 4 levels, these 4 bottom here, with the last being seen last Friday after the non-farm payroll, and the market has a bias to go up. I think the market will take out 128.27. I'm really long the sterling. So let's see if the market can go a bit higher beyond the 128.27. Okay, over in the Aussie, we can see Aussie is also trading sideways with a bias to the upside. I'm hoping to see somewhere between 0.6755 to 0.6785 levels. If the market can top out around here, I think there's a good chance the market will do a three-way pullback to test the 0.6550. Dollar Canadian does appears to be wanting to go down a little bit. I think there's a good chance the market will retest the 132.87 low before it goes higher. Top side target is around 136, which is this swing high over here. Okay. Dollar yen appears to have top out. I think the market attempt to go higher this morning. The highest traded was 145.23, which is lower than the last week's high of 145.98. So I think the bias is to the downside. I think if the market goes down aggressively, I think it will likely go below 140 for before it goes up. But let's see what happened at 143. Let's say what's the level here? 143.70. Okay, there is a possibility here market will actually hold out here before it goes higher, or the market plunge below 140.25. Okay, either way, I think if the dollar is going to be strengthening over time, there is a good chance that this 143.11 to 143.75 may actually hold. Okay. And over in precious metal, we can see prices remains sidelined. I think the market is either basing around the $2,015 to $2,027 before it attempt higher. Right now, the market has a possibility of bouncing off this level. But overall, I would love to see a deeper correction in the three-wave pullback to test the lower end of 1900. And over in silver, silver is again very much sideline right now. I think it's building up a base around $22.50 to $22.75. I think there's a good chance the market may bounce higher to test the $24.80 level to as high as $25.29. And over in oil, oil managed to come back down yesterday after rallying back to a high of $73.43 in the WTI. I think by and large, the market is going sideways with the market being sold off yesterday as the report comes in that there was an increase in stocks. Okay, so the inventory has actually increased, that caused the market to come back down. But overall, I do believe that the market has a good chance to actually rally one more time. First to tackle the $76.14 before the market attempts $79. I'm hopeful over time we can see $79. And over in Bitcoin now, this is the big one. Finally, the SEC, which is the Security Exchange Commission, finally approved 11 of the 14 applicants for a spot BTC license, but the market could not get beyond the 48,000 level yesterday, and this is a major disappointment. I think right now, now it become a fact that it's no sell the rumor by the fact effect just yet. Okay, so maybe near term we could see a three-way pullback, ideally in a formation very much like what I'm going to show you here. Ideally, it's going to be in this formation here. 100% pullback will bring us back to, let's say here. Okay. Okay. Anyway, okay. I think it exemplify where I thought the market will go to. Okay, a three-way pullback will bring the market to anywhere between 43,200 to 44,500. This will be a good level to position buy again, because I think the sentiment is still very, very bullish. People are talking about numbers that are out of this world, that after the way forward, we probably will see $150,000 worth for every Bitcoin. So So this is a number that you have to consider whether it is realistic or not. But by and large, we can see big boys would now have a vehicle to actually enter the Bitcoin market via the ETF. So this is actually very supportive of higher prices in the future. So take your pick from here. This is all I have for you for today. In the meantime, you take care, and I'll come back to you tomorrow with further updates for the CPI. Bye-bye.